Hello, Oracles. We've got Tesla stock pulling back today ahead of the FOMC meeting tomorrow, despite the fact that all of the indices were green. So, looking at where we're going from here, what can we expect from the FOMC meeting tomorrow? How can we expect the market and Tesla stock to react? We will get into all of that in just a minute. All right, so looking at the charts today, again, down just under 1.5%, nothing major going on. The RSI is still right in the middle around 51. And again, we had low volume today, lower than we had over the last week, of course, with earnings. But again, going into the FOMC meeting tomorrow, we're just kind of in that, just kind of waiting to see what's going to happen tomorrow type stage. Now, we did have Google earnings today as well as Microsoft. So these two earnings today. So Google did beat, and they're up about 6% after hours at the time of this recording. And Microsoft is down a little over 3% at the time of this recording with their earnings as well. So looking at these two here, these are two of the big players. Tomorrow we have Meta earnings, and next week we have Amazon and Apple. So the next week could be a little questionable between the FOMC meeting and all these other earnings. We have seen in the past where we have a couple of the earnings come out and the market cheers and rallies it, and then we have the later earnings come out, and even if they were good, we see the market pull back. It's almost like the market was waiting for all of these earnings to go through. So, what is going to end up happening? Of course, no one really knows. When it comes to the FOMC meeting tomorrow, the market is expecting a 25 basis point hike, and they are expecting some more hawkish stance when it comes to the Fed, probably saying, yes, we are expecting another rate hike later this year. Don't know when, but these are the things that the market is expecting. So if we get what the market's expecting, we probably won't see anything. Maybe the market doesn't even move much. I have no doubt going into the meeting tomorrow, we're going to see the typical fluctuations. When Jerome Powell comes out to speak, we're going to see the same thing again. But when we're looking at what's going on afterwards, may end up kind of settling around the same place we're at now. So it might be other things that end up causing the market to move one way or another. Now, we've said it before that August is typically a lower volume month. As we know from after hours trading, lower volume tends to move and fluctuate the market even more just because there's less volume coming in. A lot of people are on vacations, not a lot of trading happens in the month of August, so we could end up seeing some fluctuations going on. Now, we come back into September, and there's usually more money coming back into the market within the first couple of weeks of September. So August could be an uncertain month. We will just have to wait and see how that plays out. Now, when it comes to Tesla specific stuff and the fundamentals that most of us pay attention to, over on X, formerly known as Twitter, Peggy tweets out Tesla COGS per vehicle for the past 5 quarters. Tesla will continue to reduce their COGS every quarter, making each vehicle more affordable over time and increase margins while reducing prices over time. Sheesh! I love Peggy. So looking at the chart, these are the COGS. They continue to come down quarter after quarter. And now what really is important here is the fact that this is the cost of goods sold. This is what it costs for Tesla to make one of their vehicles on average. These prices keep on coming down for them. So the cost for them to make a vehicle keeps coming down. Now, we do know that Tesla has pulled down on their pricing this year, thereby reducing some of the margins that they have. However, we are seeing them now putting out other plans, like coming out with 84-month financing plans for their vehicles. This way, people can pay less per month. This is going to bring in more of the consumers from the outside. Now, the big piece behind this cost of goods sold is the fact that eventually the Fed is going to pivot on these rates. When the Fed pivots on these rates, that means it's going to be less expensive for people to buy vehicles over time. That means demand globally will go up for the entire automotive market. When that happens, Tesla will then have the ability to raise prices if they wanted to. If they don't, that just gives them more pricing power to do as they choose. Now, what we saw in the past when we went through COVID and we were having a lot of, 12-month plus lead times on the Model 3 and the Model Y, Tesla ended up going up on prices significantly during that time. That gave them some really nice margins over 30%. We are expecting the Cybertruck to be coming out with multiple years of demand. We also know with the next gen platform, if we get that sub $25,000 vehicle that is rumored, that will also have most likely multiple years of demand coming out. So while they do want to keep that vehicle under $25,000, they will have the luxury of going up on the prices if they wanted to quell some of that demand. That there in turn will also give them even bigger margins on those. So they're going to be getting a lot of this pricing power back again in the next couple of years. We saw all of that pricing power going into last year. We talked about it all the time and said that pricing power is exactly what they were going to utilize going into this year. That's exactly what they have done by coming down on their prices of their vehicles. And they still have massive margins. We have everyone else out there with legacy auto trying to put out EVs, and they're not even profitable on them. And they cannot be competitive with pricing either. Yet Tesla is out there with 17.5% margins on their vehicles, despite the fact that they've come down on the prices as much as they have. This is showing Tesla's pricing power. And again, that's what we talked about all last year. When we start to pivot next year, that will end up turning around. And now GM just had their earnings as well. And Sawyer Merritt tweets out news: GM to introduce next gen Chevy Bolt, Barra says. We will execute it more quickly compared to an all new program with significantly lower engineering expense and capital investment by updating the vehicle with Ultium and Ultifi technologies and by applying our winning with simplicity discipline. Now, as far as I know, when it comes to GM, is they're not really simple. They're not vertically integrated like Tesla is. Now, when it comes to the Chevy Bolt, maybe they're going to do something like Tesla is doing with their Model 3, and they're going to be doing the Highland, which obviously has not been confirmed. But if that's what they're trying to do, and they're going to be, putting in Ultifi and they're going to be pulling in the Ultium platform, sure, let's go for it. I'm all about anybody out there trying to help move the world over to renewable, sustainable energy and EVs. So if GM can do it, good, let's go for it. But we know how GM is when it comes to simplicity, and they're not. So be really interested to see how this is going to go. And Farzad did a great job breaking down some of the numbers that GM is trying to achieve. So GM is looking to get themselves to a target of 1 million EV run rate by 2025. In order to do this, they're going to need to grow their EV sales by about 22% per quarter. So that's extremely ambitious for them to try and get there. And he also broke down that GM says approximately 30% of the company's revenue will come from EVs by 2025, citing some of the stats from their earnings report. So now the big question I have is, if GM said that they're not going to be profitable on EVs until 2030, how is it a good business decision to have 30% of your revenue coming in from EVs in 2025 if it's not going to be profitable? That means that 30% of their revenue is going to be losing money, because what are their costs going to look like? Really kind of curious as to how all of this is going to play out. And based on their numbers, is it achievable? Again, I'm all for them trying to do this. I'm all for anyone trying to push for this, but is it actually achievable? Wall Street questions Tesla all the time, and they come out and continuously, prove them wrong and exceed expectations from Wall Street. GM does not have that prowess. I would love to say in 2025, hey, GM proved us wrong. They did it. Good for them. Really kind of leery, and you guys can let us know in the comments below what you think what GM is going to be doing by 2025. Do you think that they're going to hit that 1 million vehicle run rate by 2025? And do you think that they're going to have the revenue coming in at 30% from EVs? So, quite honestly, my thought behind all of this is, if they're not going to be having 30% of their fleet coming out being EVs, how are they going to have 30% of their revenue be coming from EVs? Just saying. Maybe they have some software plans in there, like the FSD things. Maybe they think Super Cruise is going to be doing it. I truly don't know what GM has in store for this. Perhaps there was more on their earnings call that I did not listen to. I have not heard anything about it. However, really just kind of curious as to where all of this is going to play out. Not only that, but my rough production estimates for 2025, and I do need to update these, I have Tesla coming in with about 3.6 million vehicles getting produced in 2025. So to me, I think that's a pretty conservative number. That's almost 4x what GM plans to have coming out in 2025. So again, when we've got GM coming out touting that they're going to be leading and they're going to take all of this, but they're only going to be producing 25% of what Tesla is going to be producing, doesn't make a lot of sense. GM's ambitious goals are a quarter of what Tesla is going to be doing on a conservative basis. So that's my thoughts on that. But again, this just shows the long-term strength Tesla has and the lead that they have built for themselves. And that doesn't even include the energy, FSD, Optimus, all of these other things that Tesla is also working on. So otherwise, little pullback today. Again, I'm not horribly concerned about it. We are looking long term here. Long term, I think it's going to be amazing. Anytime we get a pullback like this, I'm going to be excited to buy. Just kind of waiting to see what happens with the macro environment over the next year. But either way, I'm still adding every day. I've added more to my TSLY today as well. I pulled some out of my QYLD because yesterday was the X date for it. So I'm going to get my dividends for that. Took that money, I'm going to put it into TSLY. And I'm just going to kind of ride this out. I've got some other things I'm going to be discussing as well with you guys. My dad was letting me know about treasuries, things that I've never gotten into. So I might be moving some money from CDs over into treasuries, just a little different way to play things out. Trying some new things to diversify, keeping my money in some ETFs as well because I like the way they're trading. I'm going to see how we go into August when it comes to TSLY. Lots of moving parts. Again, I share all of my portfolio with all of my members and patrons on a weekly basis so you guys can see where I'm at there, any trades I have made. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.